You're walk because you're walking in snow, so it's a nice, beautiful workout.
Oh, that's wonderful.
Yeah.
All right. Well, thank you so much for being here with us, Kevin. And thank you for everyone who's joining. We still have 1 minute, but I think I can just get us started because we have so much great ground to cover. If you're new, if this is the first time you're here, I would love to uh, put new in the chat box so we can welcome you. All right. New. Okay, good. So glad. So first, I'm going to share a little bit just about the Real Estate Investor and what we do and some free resources that we have available. And then we're going to dive into the wonderful presentation for today. So I want to share a little bit of what we can offer. So we have a free Facebook community that has over 15,000 members. And this is really meant to be a safe space where women can come, ask questions, get the support that they need. And what's really cool about it is, regardless of what market you're in, I'm sure there's someone in the group that is near you, can support you, can help you, have been where you've been before, can help you with any issues that you're facing. So that's a great resource. We also have investor meetups. So if you go to our main website, you can connect with other investors in your local market to see what strategies are working for them, what contacts do they have that could be helpful. So definitely check out our meetup groups. Also, if you are an agent, so we also offer eXp Realty Investor Org. What's really cool about this is it provides education and support and accountability because you've already helped other investors build their portfolios. It's really meant to help support you build yours. So that's a wonderful, wonderful offering that we have. Of course, our free webinars, just like this one, that we bring subject matter experts to really help educate, help shine the light on other interesting things going on in the industry. And we have our premier real estate investing conference for women called InvestorCon, which is going to be in Austin, Texas in early June. So we really hope you're able to join us. And lastly, we have an amazing Strive mentorship program. You can scan the QR code here to learn more, but it's meant be it's meant for more seasoned real estate investors with 5+ deals, and mentorship, accountability. That I could go on and on. There's so many great parts of this program, but definitely scan this code to learn more. And if it's something that you feel like you fit that criteria, we have a great resource for you. You could scan the QR code right here and do a free strategic business call with our team to really understand what are the next steps for you to take your business to the next level. So highly recommend, if you have done 5 to 10 deals, or you're a business owner that's outside of real estate, please take advantage of this offering. It's super helpful. All right. And with that, I'm going to turn it over to Kevin. This is Kevin Rodman, CEO of Asset-Based Lending, who has over 30 years of experience in investing in real estate. So we're going to dive into powerful data and insights from the national real estate landscape, focusing on which investment strategies are poised to yield the highest returns right now. So Kevin, we're thrilled to have you. Thank you for being here. And I'm going to turn it over to you.
Thanks, Tessa. And I just want to say we're really proud to be involved in your Invest Her, and we think it's a great cause. Uh, More than a cause, we think it's a great initiative. We've been lending for 13 years to thousands of investors, and frankly, it's pretty uncommon to have just just one woman come to us and say, "This is my investment and my money. I'm going to do this." So we hope that the organization is really successful and that we can contribute whatever knowledge and assistance that's necessary to make this work. Um, so what I'm going to present today is ABL's view on where there's opportunity in investing and what we see in the markets. And I've made this presentation a few times before, and what's been interesting is we found that the audience has been interested for me to just briefly give you my background and also ABL's history, just to know where we came from. So I have actually been in the mortgage business and in Wall Street for almost 40 years. Formative part of my career was at Morgan Stanley, and I joined there in 1984 when it was a private company with 2,900 people. And I started actually in government bond trading and had a great education in the yield curve and interest rates and trading, and then moved on to Morgan Stanley's lending businesses pretty quickly in the mid 1980s and helped build most of Morgan Stanley's fixed income lending businesses, and ultimately moved to mortgages and built Morgan Stanley's mortgage lending business in the late 1990s and 2000s. And I ended up being president of a Morgan Stanley subsidiary called Saxon Mortgage, where we had over 1,000 people in Texas. And I was president of Morgan Stanley Home Loans, which was our retail origination unit that originated $5 billion a year in retail mortgages to Morgan Stanley's retail investors. And I also was co-head of Morgan Stanley's mortgage conduit that bought mortgages from over 600 mortgage companies across the United States. And so it was a very mortgage heavy experience, mortgage credit, mortgage trading. And then, frankly, it all came to an end in 2008, and we had to unwind it, and painful for a lot of people. And some friends and I talked about what's next after 25 years. And what we thought was that there was an incredible shortage in 2010 of liquidity in the market for real estate investors. And wouldn't it be not only profitable, but a great service to create a lending company that lent to investors who were buying distressed real estate at that time in 2010? It was pretty easy to find opportunity, and build a retail origination company. So that's what we did. Two friends and I, we started the company in mid 2010, and we capitalized it with our own money. And we put out advertisements, and after a few months, our phones started ringing. We built the company in a small office in Hoboken, New Jersey. Right now, I'm in our headquarters in Jersey City. My home is in Connecticut, and I have an apartment next to the office here. And we built the business slowly. Our mantra was to provide outstanding customer service and make great loans. And we're very proud of our track record. After We never tried to be the biggest, we just tried to do the same thing over and over again and make great loans, build great borrower relationships. And after 11 years, by around 2021, we were originating around 350 million a year in loans, which was a big growth spurt. And 65% of our borrowers were repeat. And we also specialized in first-time
Hey,
borrowers.
Kevin, so sorry to interrupt, but I don't believe we have your slides up. So just want to make sure we can get those shared for the group.
How's that?
Much better. Thank you.
Okay. So in 2021, what we realized is it was time to go for something much bigger. We were an East Coast company, and we sold the company to a private equity firm, and they gave us a lot of capital. And since then, we've expanded to 35 states. We have over 1,000 borrowers, $500 million in our portfolio today. So, and when we get to the Q&A, I'll be happy to talk about anything having to do with the mortgage markets and and how we got to where we are today, where I think we're headed. And but I'll present our thesis. So we we really believe in the fix and flip and new construction business. And this year we've done over 550 million in loans, and we've grown 20% this year. And the reason we believe in it is really there's two overriding theses. The first one is that the millennials are the largest generation in history. And there are over 80 million millennials. And as of today, less than 40% have bought homes. And we believe that over the next 10 years, as the millennials continue to form their households, that most of them are going to want to buy a home. And they're going to be pretty much just like my generation. I'm a baby boomer. And we believe ultimately the millennials will get married. I'm sorry, the millennials will find partners. Many of them will have children. They'll want good schools, or they'll, if they don't want children, they'll want more space. Either way, we believe they're going to want housing. And the demand is going to be literally almost unstoppable. We think the demand is going to be for well over 10 million units over the next 10 years. The second, there's actually two other trends. The second underlying thesis of why we feel great about our business model is the structural shortage of housing. And there's typically about a 4 month supply on the market nationally and over 4 million homes offered. Today, there's barely a million homes offered, and it's a little bit more than a 30-day supply, despite the fact that housing is the least affordable it's been ever right now, since it's been measured since 1984. And mortgage rates are much higher, and there's fewer buyers. There's still an extraordinary shortage of homes offered relative to demand. And so the final piece of the puzzle is the Great Migration. And the Great Migration is people moving to the South from the North. And so what you can see here is we're undergoing one of the largest shifts in population movement in American history. And as everyone, I think, knows, the South is seeing the largest gains. And part of that is due to remote work and taking a lot of high income earners from states like California, New York, um, Illinois, and New Jersey, Massachusetts, and they're moving to Florida, Texas, and the Carolinas and Tennessee. And a lot of the people that are moving are high income earners who can afford to buy nice homes. The other thing that we're seeing in our book, and over um, we have over 700, we have 60 to 70 homes a month selling in our book, over nearly 700 a year, is baby boomers are one of the biggest buyers. And that's because ABL is a big lender in new construction in the South. And baby boomers, most of them, a lot of them have already paid for their homes in the North or in California. They're selling them and they're buying all cash. Over half the homes that are selling in ABL's portfolio are all cash buyers, which is a good thing. So people are moving to the South. Florida used to be for retirees. Now it's becoming a really big hotspot for millennials. And in 2022, Florida outpaced every other state for growth, and we're still seeing a lot of in-migration there, and shifting somewhat from Tampa, the Tampa area, and the West Coast. Miami's really hot right now, and a lot of businesses are moving there, which is attracting growth. And California and New York, New Jersey are very expensive and are getting priced out. And cities like Austin and Nashville are getting a lot of transplants from there. Um, Number one, the weather. Uh, it's a nice, fun environment, easy access to the outdoors, and lower cost of living, often by as much as 30% compared to the northern states. Now, I'm a New Englander, and ABL is the largest private money lender in New Jersey. We do over 150 million a year here, and we believe in actually New Jersey. And one of the reasons is family ties. There's a lot of history in these states in the north. So, and the only reason I'm bringing that up is there's plenty of opportunity in the north. Just because people are moving out doesn't mean it's a wasteland. There's still great schools here. And frankly, in the South, pretty hard to find great schools in some of the zero tax states. The tax dollars actually do pay for something, schools, one of the things. And um, and also there's an attraction to the big sophisticated cities like Boston and New York and um, Chicago and these places. So we still do a lot of business uh, in the north as well as the southern states. Um, this shows what I talked about in the beginning, which is millennials are lagging in homeownership, and it's a record low compared to where other generations have been at this stage of the millennial house forming timeline. And why is that? Well, lack of inventory is probably the biggest reason. High mortgage rates, higher cost of living, and delayed family formation. And one of the reasons the millennials are delaying is because they want to save more money so they can buy a home. Um, so interesting, what I touched on is baby boomers are actually outpacing millennials in 2023. If you look at this yellow line, this was a surprising shift. And what's happened here is what we're seeing in our book and what I think is happening across the country, as what I alluded to, is millennials are selling their homes in the north and buying houses generally in the south. And we see here millennials are declining, and it's because interest rates were, at 2 and 3%. Homes were more affordable. They're finding homes to be less affordable. And I also have mentioned that there's a shortage of available housing. And there are a number of reasons for that. But one of the biggest is something kind of I still find surprising, which is fallout from the crash of 2007. And and I was really at the center of that, um, being one of the senior leaders of the mortgage division at Morgan Stanley at the time. We were one of the biggest players in that market. And Morgan Stanley didn't do this. I wasn't involved in land development, but there were many banks across the country in the 2000s that were involved in lending to big builders. And the big builders were creating plots of land that were permitted and shovel ready to build. And that's called horizontal development. And horizontal development is risky. It's riskier than doing vertical new construction or fix and flip. And by the way, there could be a number of people on the call who want to build rental portfolios, and we're very much involved in that. We do hundreds of millions of dollars of 30-year rental loans, and that's a great market as well. So when I'm talking about new construction and fix and flip, I'm also including in all of that anyone who wants to do that and hold and build a rental portfolio, and also multifamily. Those are all businesses that all of our borrowers find niches in that where they can make money. So the banks got hurt. When the crash happened, the housing market came to a hard stop. Nobody was buying, and there was extraordinary distressed inventory available all over the country. And so there wasn't much reason to build housing back then. So banks lost huge amounts of money on either lending against land or lending against land and putting money into building infrastructure on that land, like roads and sewers and electric and plumbing. And the banks lost so much money that they just stopped lending. So all throughout the decade of 2010 and 2020, there's been a huge shortage of development of land for building. And so what that means is it's opportunity. And it should be opportunity for people on this call is if you can find land that's in an attractive area where you think you can get it permitted, that can sometimes triple, quadruple the value of the land if you've bought it at the right price and bought it generally cheap. Um, it's different if you find a piece of land, a plot that's expensive, say $150,000, $200,000, and it needs to be permitted. That could take time and money, and you might end up with investing 275 versus what we see a lot of in Florida and Tennessee, the Carolinas, especially Texas, in what I would call second tier cities. Not so much maybe um, in the center of Nashville, which is clearly a high end market now, or um, center of Dallas, but the cities right outside. Same thing, not so much downtown Atlanta, but Macon, Georgia, other second tier cities. You could still buy land cheap, get it permitted, and make money doing what we call infill, not building 100 homes, but building 2 homes, building 3 homes. And we have, and we'll get into that and more, our what we see in new construction. Um, COVID. So it's really fascinating what happened. Um, what we knew is that because millennials were delaying household formation and that there was a gap between baby boomers, empty nesters, wanting to sell their homes and downsize and maybe move to the South, or baby boomers already in the South wanting to downsize, um, and millennials who wanted to buy homes. I think a lot of you probably remember there was a theme before COVID that millennials are different. Millennials love turnkey and close their apartment door and get on an airplane and go travel somewhere. Millennials love urban environments and what cities have to offer. And so actually house prices up until COVID, there were a lot of pocket markets that were declining. And I'm one of those people. My wife and I own a really nice home in Westport, Connecticut, and the value of that home was going up until about 2017, and then it actually declined for 3 years because there weren't any buyers. There were hundreds of homes on the market in my town, and we have the best school system in the state of Connecticut. And I bought my home thinking, oh, I can't lose. Here I am, a real estate guy. I can't lose owning a home in one of the best school systems in the country. And sure did, went down 30%. And then COVID came, and it was like a vacuum. And we were worried at ABL. We had a couple hundred million maybe in our book at that time. What I mean by that is I had money lent to investors who were building or flipping homes. And it was the summer of 2020 and then into 21. And it was like a vacuum cleaner. And we went from scratching our heads thinking, gee, what's going to happen here with COVID? Our home's going to sell. And then suddenly every single available property we had sold, gone like a vacuum cleaner. And what I think happened then is what would have happened 4 or 5 years from now when the millennials got more serious about household formation and wanted more space. It all got accelerated and scrunched into several years. And a massive um, movement occurred from the cities to the suburbs and smaller second tier cities. And I think that took some demand away from the next few years that we're living in now, a little bit. And but then we also had the double whammy of the interest rate increase and the effect on affordability, and also the huge run up in housing prices that was created by COVID and zero interest rates. Um, that is now, I'm sorry if I'm jumping all over, slowing down demand to some extent. And I'll be happy to answer questions about that because typically, from my experience, with interest rates rising as much as they have, and I got out of graduate school in 1982, by the way, when rates were at 18%. And and I, I knew mortgage rates were going to go up a lot. And typically with rates going up as much as they have, house prices should have fallen at least 20%. We should have seen one of the biggest house price declines of the last 50 years. And we haven't. In fact, house prices continue to rise. We see it flattening off in areas, some oversupply. We all know, I think, we've heard that Austin, Texas on the high end is oversupplied. ABL is a big lender in Tampa. The high end of Tampa is completely flattened out and is slow. Um, and But houses still priced at $500,000, new houses we're seeing are still selling generally in 30 to 60 days because of the lack of supply. Okay. So the millennial boom, we still think it's around the corner. Only 43% of millennials own homes. I had my number slightly off before versus 67% of Gen X and 77% of baby boomers. Millennials are the largest generation ever. And there are a lot of millennials that missed buying a home in COVID. And they're now going to be the next wave, the ones who missed, and they're saving money. And there even are millennials that are cash buyers, but most of them aren't. And right now they are priced out of the market. But we believe that will change, and that over the next long horizon of 5 to 10 years that they'll be unstoppable. As I've said, there's going to be millions of them looking for homes. There's going to be some type of realignment. Mortgage rates will come down. In fact, they've come down a lot in the last few days. I think they're going to continue to. It'll be choppy, but we're going to see mortgage rates come down over the next year. And something's going to have to happen with home prices. I don't have a perfect crystal ball on that, but uh, to get affordability back to where it needs to be, incomes are going to have to keep rising, mortgage rates are going to have to keep falling, and house pricing is probably going to have to come down somewhat. Um, so new construction. ABL's always believed in new construction. Uh, we've always leaned into it. And in fact, this chart is almost outdated. In November uh, of our 60 or 70 million in production, almost 70% of it was new construction. And we love new construction because once it's permitted, the 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 process of getting it done is very clean and clear. There are stages, there's the foundation, there's the framing, there's the putting on the roof and the siding and the windows. Then there's the interior work, there's the rough ends and all of it is inspected along the way. And then there's the finish work. And a lot of the new construction that we finance right now, we have nearly um, uh, 350 houses being built in our book. Um, a lot of it is no larger than 2,200 square feet. We like to do affordable. Well, that used to be what I would call somewhat affordable. 3 or 4 years ago, that might have been $300,000 in Florida. Now it's 600. But we like to do houses that middle class families can generally afford. We generally stay away from high end housing, meaning houses priced over $2 million, because uh, it's a limited buying number buyer pool for those homes. Um, and we also see that millennials have a real taste for clean and new, and maybe past generations have. Um, I know in the 90s when I was buying and a lot of my friends were buying homes, um, that wasn't particularly a overarching desire when we were buying homes, and but it is now. And so people want millennials want either new homes or they want substantially new homes if it's been a fix and flip. That's a really strong trend. Uh, so we do a lot of fix and flip where $250,000 purchase, $70,000 reno, which is basically kitchen, bathrooms, um, updating, lighting, painting, floors, um, comes out clean and nice. It's not it's not brand new, but it's crisp. Uh, but we also find that somebody that does a full gut and it really feels brand new uh, will sell somewhat more quickly and appeal to the millennial buyer um, um, generally. Um, so that's what we got here. This is just an example of a market that's booming, that's that's benefiting from the not only the Atlanta migration of people from the north to the south, but the gentrification of the Atlanta market. And there's a lot of unique, pretty cool neighborhoods in Atlanta that attract millennials and upwardly mobile um, um, people of color who are really attracted to the Atlanta market. Um, and so the average home sale time is 29 days. We see that in our book. Um, Atlanta makes up 53% of the entire real estate value of the state, um, and still a strong market. We do a lot of lending there. We also have a lot of new construction in suburban and I would say ex-urban Atlanta, where what we saw during COVID was a lot of work from home people moved to smaller towns that were about an hour outside of Atlanta because they could get there, bit of a long drive, but not terrible. And there were some good school systems, quaint small towns that where they could buy something 400 or less, still a lot of room. And we really like that business right now. We're really attracted to people who have a business plan and have either found a great reno opportunity or a new construction opportunity in, say, a town with 10,000 to 30,000 people with decent schools, safe, nice environment where um, and some access to a bigger city nearby. So, quick week recap, 2024 and beyond. Largest population shift in 50 years. Huge lack of inventory, delayed buying. The millennials are coming. Um, you should look for markets where inventory is tight and look for opportunities there. And if you have no construction experience, you should always look for a partner or a builder in the area that's got experience. The build to rent and both the build to sell business is booming. Um, I do want to say that um, I've emphasized new construction in this presentation, but uh, while 70% of our recent business has been new construction, historically, new construction has been 30% of our business, and there are reasons for why it's skewed right now. One of the reasons is that housing has gotten so expensive that our repeat borrowers, which is over 60% of our book, are finding it difficult to find um, well-priced fix and flip opportunities and easier to find land where they can build or tear downs and build new construction. And um, right now, we have about $25 million a month of homes, maybe 30 million paying off. And the average days on market is 30 for new construction. We also, as I said earlier, um, have enjoy working with first-time investors. We also have no problem working with builders who have never built a home on spec, but who have built the same model for others, say 10 times. And we see it all the time. And a lot of these builders, frankly, don't have good credit. So we see investors who might have some experience doing a few flips, partnering up with an experienced builder in a location, um, and we take risk with that type of situation because we've got somebody with money, with some experience, but not new construction, and we've got a builder with new construction experience whose credit is so banged up that they need help. So that's a part of our business line that we have great success with. So with that being said, um, just a quick story about us. Um, we're in the speed of money business. We we close in days, and and there's a lot of lenders out there. I think when you're choosing a lender, you have to choose somebody you trust. And we are, uh, I'm not here selling ABL. I'm here to answer questions and help people learn about the market. And so when you go out looking for a lender, find somebody you can trust. And and because we close fast, we charge what appear to be high rates. Our lowest rate is 10%. And um, and we go as high as 15% or more for first timers. When you do the math, if you're going to get out of your property in under 6 months, the difference between 10% and 12% is fairly negligible for the profit of your overall deal. So while rate matters, what's more important is, are you dealing with somebody honest? Are you dealing with a pro? Are you dealing with someone who you can trust? Do you have a loan officer who will pick up the phone? Do you have a lender who you know has the capital to fund your draws? And will their draw process fit your needs? And so when you're making the decision to choose a lender, you got to look at all these things, all those variables, and don't run into it. Don't rush, and make sure you've got those things. I really can't even count the number of loans right now that we've done that were failed deals from other lenders that were good borrowers, where the market's somewhat distressed right now with the rise in rates, and lenders are failing. And ABL has over 100 million capital, um, and so we're very stable with hundreds of millions of capacity. And um, so many lenders have failed to fund draws, and so you got to find a lender that's going to do that. Um, we're local in every market. We hire local attorneys. We hire local appraisers. We don't use these companies called appraisal management companies that take weeks and don't get the job done. We have local inspectors. We're doc light, no taxes, um, no no income verification. We do pull credit. We do look at your background. Um, we also have a program now where we use a company called TruePick, where you take pictures and videos and upload them to a TruePick website. They instantly come to us. We instantly evaluate them for your draws and advance your draw money. We can do it same day. If you get it to us at 8 a.m., we do it next day. And that program's been working fantastically. Our borrowers love it. And we also, of course, offer the full round trip. We offer 30-year loans after you do your reno and your construction. So um, we have over 120 people. We've just done what's called a securitization with a 2-year locked in revolving pool of credit for $150 million. We have over $200 million of bank lines of credit. We have over a dozen buyers of our loans, but who can provide us liquidity, and we asset manage those loans. We never give up our asset management. So you're always dealing with an ABL employee. We're super high touch. We believe in giving our borrowers a um, life of loan team. So our salespeople, many of them have a sales assistant. A sales assistant is sort of your gatekeeper and your loan officer to the whole company. Then you get a team to help you close your loan. We call them pods. So our salespeople have a pod with a loan processor and a loan closer that never changes, and they all meet weekly or daily to go over their pipelines. And then you get a handoff to your asset manager, and every borrower has at ABL has their own asset manager who follows your loan for the life of your loan. And you actually talk to that person. You could pick up the phone and call them or email them. And uh, we believe it's expensive. ABL has a lower profit margin than other firms of similar size, but it's our core. It's core to our strategy. And another thing we do, which is comes from our beginnings when my two partners and I were the only underwriters, and I've underwritten over $500 million of our loans, and um, which is you make contact with our salesperson, you get qualified by our salesperson. Our salesperson helps you size your loan, helps talk to you about your loan, gives you education if you need it, talks to you about what works and doesn't work. Then we do something that no other firm does apparently, which has always surprised us because we think it's the only way to do business. Your salesperson submits your loan, it immediately goes to our underwriter. Most other firms underwrite at the end after you've submitted all your documents. We underwrite day one, and our underwriters don't go home until we've looked at every loan. And then our underwriter calls you and our underwriters spend on average a half an hour preparing your file. We check all your comps. We check your experience. We check the viability of your project. We look at your plans if you have them. We always look at your scope of work. We know exactly what things cost in just about every market. We know if a light reno should be $20 a square foot or 40, and then we get into the medium renos of $50 a square foot to 70, and then the heavy renos of 70 to 100. And then once you get above 100, you should be in the new construction range. And we assess that, and then we get on the phone with you. And our job is to make a good loan. And when we're making a good loan, it means you have a good project. Our systems calculate your profit margin. We take a look at your potential rental income on every loan. It's all automated and calculated. And we're available. Our underwriters will take as much time as you need to talk to you about your project. And we will take a look at your scope of work and say, hey, you sure this makes sense? This looks expensive for what you're trying to accomplish. You're buying this place for 300. You're putting in 70. Our numbers think that your profit margin's only going to be $40,000, and it's tight. And what do you think it's going to be? And what are your comps? And these are the comps we're seeing. So we're all about partnering with you to make sure your deal makes sense. And then when the appraisal comes in, we of course share it with you. And then our underwriters immediately pick up the appraisal, go back into your file and say, hey, okay, we like this appraisal. We think it makes sense. Does it get you where it needs to be? Does it get you enough profit? And if it doesn't, we're going to call you and we're going to talk to you about it and see if we still have a viable deal. And
Kevin, do you mind just going to the next slide just so people know how they can contact you? I want to make sure that people see that and they can know how to reach out to you. We do have a bunch of questions. Is there any other final comments you want to share? I want to make sure we get to these comments in the chat.
So that's how you reach us. That's our main number. Or email us at abl1.net. I'm sorry if I've talked too much. Tessa, I
So
get
much good
started.
information. So I'm certainly not trying to cut you off, but I just want to make sure we get to some of these questions here.
Let's go. Question time.
All right, great. So we have a question here from Jessica. She says, if you foresee a boom in millennials purchasing homes, what do you think that will do to rental markets? Will people who leave rentals to buy homes leave behind a vacuum, or landlords are struggling to find renters?
Um, Jessica, that's a great question. And I believe the answer is it will not mean that rents will fall. And first of all, everybody knows anything that we're talking about here is very local. It even gets zip code specific. So you really have to assess the um, the rental market in your locale. But the truth is that a lot of families first, I'm sorry, it doesn't have to be a family. It can be, it's whoever it is that's forming a household. It's people leaving their parents' home and and could be a single person. Um, how do they start? And they might start renting. And so the demographics are so strong, and there's so many millennials that are going to be leaving their parents' home or moving from one locale to another, that the supply of rental properties in a lot of areas is, especially that where there's a lot of in-migration, is still very tight. There are some markets where there's been overbuilding, where rents are flat to slightly declining right now. And those are also very local and specific. There are neighborhoods in Austin and neighborhoods in Dallas that we see where rents are flat. But overall, we believe, uh, while there's been this massive run up in rents lately, that rents should revert to the mean and go up with inflation generally, unless there's some weird oversupply. There's there's always a demand for rents at at the right price for median wage families. So if you're if you're talking about a luxury rental, that's a unique market compared to a $1,800 two-bedroom, one bath apartment in a decent neighborhood. And the school system matters. So get specific. I hope I didn't talk too much. We're bullish on rentals.
Awesome, thank you. And I'm also, so another question here is from Nikki. Hi, Nikki. Outside of Atlanta, Georgia, what are other markets that you're seeing growth in? And she's also getting more specific. Is that growth in flips, single family, multis, new dev? I would add to that as well. I'm curious, what data sources and what metrics do you look at for when we say quote unquote growth? Would love your expertise there as well, other than just population growth.
Thanks, Nikki. Um, we're in 35 states. We're not everywhere, but some of those states, there's not a lot of activity. So um, we see growth in every major metro in Florida and in Texas. And we see the biggest opportunity right now in the Carolinas. We see a ton of people moving there, a significant shortage of housing, and we see even small towns in the Carolinas with a lot of demand. A lot of that's being fueled by remote work. Even away from the coast, we see, and Tennessee, we have a big presence. Um, Nashville, downtown, as I alluded to earlier, is um, very gentrified at this point. There is some significant fix and flip, but outside Nashville, it's extraordinary how much is being built. And then you go to the western side of the state into the mountains, and also huge demand, huge demand. People from the north love it there. The access to the people who want access to the outdoors are just really gravitating right now that we see to the Carolinas and Tennessee. Um, there are other states that we're not too big in that probably the same thing is happening. We don't have much of a footprint in Louisiana. We're trying to build out Alabama, particularly Huntsville is big. There are areas of Virginia along the coast. So, um, without a doubt, new construction is a sure thing right now if you pick the right location. Um, fix and flip.
Can you explain a bit more about the new construction opportunity? Because you mentioned like being able to find land at a good in the right and also in the, I believe you said secondary markets. We have these major metros that you're seeing growth in, finding those. Then these do you have any recommendations or thoughts on how do you approach trying to then find land in those secondary markets that could be a really hot opportunity to capitalize on the inventory shortage? And coming after that, I also want to touch on, we see this millennial boom coming, but you also said there's real opportunity right now with baby boomers. So is there something that, do you see any recommendations on how to capitalize on that right now before this big millennial boom comes?
Okay. Thank you for the question, Tessa. Our most successful borrowers are very local. So you got to know your area. And so how do you find land? Well, the best way to find it is to have your boots on the ground and to know everybody. Network through every builder, every real estate agent, and drive around, and you see a house being built, go in and talk to the contractor and find out, are they the owner? Are they just the contractor? Who's sponsoring it? And you got it. That's how you build your network. And that's how our most successful borrowers find their opportunities. Um, they know everybody. And sometimes MLS is useful, generally not for land. But most of our borrowers don't find their properties on MLS. They get them off market. Um, what we see with baby boomers is they're downsizing. So so most of them want um, no more than 3 bedrooms, 2 bath, sometimes 4 bedrooms, 1,800 square feet, 2,000 max. We see surprisingly, um, actually, I shouldn't be surprised. 5 years ago, baby boomers, I'm sorry, retiring baby boomers were buying a lot in Florida for 350,000. And these were bungalows, 1,800 square feet. They were getting built in 6 months. They were slightly above builder grade. And those houses now are selling for $500,000.
Hmm.
And it's not the price point that we're seeing baby boomers want to pay. So we're seeing baby boomers buying in places where there are developments in Georgia and the Carolinas, where it's an hour from a big city. And these are really nice homes, really nice um, towns where where there's access to the outdoors, as I've said before, and quaint little towns where people can walk and feel safe and buy a house at the right price point. For baby boomers, we're seeing that right now at about 350 to 400. Um, I think somebody asked about data. So um, we use a source called Black Knight. We have House Canary. Uh, all these things you have to pay for. Um, we use something you can get probably for free, Zillow. We get tons of data from Zillow, but we use computers to grab it. How houses are selling. Um, in our Black Knight data, we get population migration. And we pay for all this, and
Mhm.
we have other data sources that we pay for.
Super helpful. And I think we have time for one last question. This is a bit broad, but I think it's still helpful. Just how would you approach this? So what's the best way to explore real estate off market? And there's no
Same.
one way, but if they maybe for someone who's getting started for the first time, what are the different avenues of exploring real estate off market? Have you had any strategies or approaches in this market right now that have been more effective?
I have a lot to say about this question because ABL for our entire lifetime, which is 13 years, has specialized in first timers. We're not afraid of a first timer if you're smart. That's the first thing we look for. Does the person have the smarts to get it done? And that means you have to really be able to talk fluently about the opportunity. Okay, so in the old days, in 2010, when we got started, and even through 2017, 18, there was still a lot of hangover from the crash, and people could find properties. And I'm sorry if there's background noise. There's a fire alarm test. Um, and people could still find properties without having to spend 50 hours a week doing it. They could still have a job during the day and look at night and look on weekends and find something. Because to be a first timer, it's pretty hard to commit, right, without an income. And now I have to say, and I don't want to be overly negative, but in most of the areas in which we're in, because housing has become so expensive, it's kind of a full-time job to find something off market. And the only way to find something off market is to build a really strong network. It'll be unusual to find an off market house on MLS. And you have to know every real estate agent. Um, Courthouse is a great place. You have to know about foreclosure sales. And there's a lot of places where we still have borrowers who are buying well-priced homes at foreclosure sales. And some of those are risky because you might not be able to get inside. And we'll lend against that. But so foreclosure sales, um, although there's not a lot of foreclosures, they're still happening. And you have to be able to network to go to real estate meetups. ABL runs some everywhere, and you absolutely will benefit from going to every real estate meetup. Um, I'm sorry, I'm just going to close the door.
Yeah, no worries.
Didn't know there was a fire alarm test today. So it's hard work now. It's much harder than it was before. I'm not trying to be overly negative, but if you really want to be successful as a first timer, you need to figure out how to devote 20 hours more a week to it at this point to build your network, go to real estate meetups, talk to everybody, get your feet on the ground. It's the only way to do it.
That's great advice, Kevin. Thank you so much. Thank you for this wonderful presentation, chock full of insights and helpful data. I know there's been a lot of activity in the chat already of folks that want to reach out to you to connect. Just want to say a big thank you. I'm going to wrap us up on time. We appreciate you being here. Thank you so much. And everyone who is here, Carrie shared her contact information in the chat, and as well you can take a screenshot of the website and phone number on the screen. Thank you so much. Have a great day, everybody.
Thank you. Thanks, everyone. Thanks for taking the time to listen to me. Bye-bye.